Greetings, test takers. Brian Lee, the test geek here. I'm so excited. Episode 6 with, of course, the incomparable Series 7 guru, Dean Tenney. How you doing, Dean?
I'm doing fantastic.
Can I tell you how excited I am about episode 6? This, of course, is specific to the changes in the Series 65 due on June 12th, 2023. We have been hearing the rumors and all of the wonderful flaxum that's been floating out there since NASA introduced the changes. Now, Dean, you and I, two old war horses, we've seen these changes come quite often. And oftentimes, they can be significant from time to time, but oftentimes, they really don't mean a whole lot. So let me start this off. The most important change, the best change, 72 to 70. Yay!
Brian, we want to make sure that the urban myths, before they get fired up, and they're already getting fired up, that people remember that was the point of the change. The most material thing is a lower passing score. The rest of it is I think maybe, Brian, camouflage for them to make that change. I just don't think they feel comfortable saying we're lowering the score. So I think it's a better conversation. We're lowering the score and we're tweaking the test specifications.
I think so. I think some of these test writers at NASA might have to justify their job a little bit. We just can't lower the score. Oh, there has to be some content changes somewhere. Well, Dean and I have scoured the test specifications, and there aren't many. And even those that are they going to show up June 12th? Again, oftentimes we've seen changes come and go for all the exams. You name the exam, we've seen changes, right? Oftentimes, they just can't start randomly throwing test questions into the test bank. They have to go through beta testing. Now, some of these may have in the past. I've got my suspicions. I don't know for sure, of course. I have my suspicions that some of these questions have shown up in the past as beta questions. Now, didn't know it then, but okay. But again, they're just not going to randomly throw content, right? How are they going to then help assure a higher passing rate if they just throw random content at you? Dean?
Yeah, all those questions, Brian, as we know, have to be tested for validity. And you brought up a good example the other day where, are they going to do it on noon of June 20th or midnight and Brian, it was funny. I know you and I were joking about that, but I've literally had that real conversation as we knew we were with people testing on June 12th. And is it the 72? Is it? So they changed the score at an arbitrary date. But as you said, then they beta these questions. And we've seen even those experimental beta questions come and go. Some stay and some go. And if it's something that we hear once or twice, I think, Brian, you said you don't listen to anything until you hear it twice for confirmation.
I hear it. I just don't start kind of mentioning it until I get confirmation.
So I think that's where we're going to be in this next several months as they roll this out.
That's right. Again, on June 12th, was it midnight New York time or midnight Honolulu time, right? I mean, there's 6 hours difference between them. Yeah. Again, these are slowly going to be integrated through if it's been through the beta testing and it's passed the beta testing. Remember, everyone is supposed to be judged in the same risk level. And that's how they do this. They have specific statistics on the entire 130 questions that they send to you, so that everyone basically is playing on the same level playing field. So, you don't expect 47 different highly sophisticated questions show up on June 12th. It just won't happen. Specifically, as I mentioned, we've scoured the outline, which is public domain. It's on NASA's website. And we found very few changes out there. And we'd like to come to you and talk to you about a few of these changes today. But again, remember, it doesn't mean they're all going to start showing up on June 12th.
Yeah, Brian, I would hope too that people don't feel like you need to call your test prep vendor and say, I need the latest edition for the changes. Most test prep vendors will address this through an addendum or a
Absolutely. Just like they have.
dashboard.
Yeah.
I don't think we'll see new study materials, paid study materials anytime soon. And then remember, that's where Brian and I in podcasts like this can be a little more responsive and as intermediaries, would be a little more on the front lines or leading edge of these changes.
That's right. Yeah, you can imagine the amount of inertia, not to mention cost, it takes to change and republish an entire textbook. The major publishers will publish addendums. They can easily change their electronic Q banks. They can do that. Some even they used to have sections on their website where they go changes to, the LEM, the license exam manual, page 470. They used to have that kind of thing too.
Right.
So that's really all you have to start looking for. Dean and I will put out all the content that we hear as of June 12th when it rolls around. But again, just don't think it's going to be that much. Really don't. So with that being said, let's take a look at some of the changes that we've noted from the test specifications from NASA on the Series 65. I have to scroll to page 4 before I find something.
Right. I think, Brian, I was just thinking as we were talking earlier, lack of a better word, it's more cosmetic. They've taken a lot of things and just unsquished them. So they used to be squished in paragraphs, and a lot of the changes are just more bullet point oriented, but there are some stuff that we'll talk about. Indeed.
That's right. So the first thing I see change, and it's under the investment vehicles section of the content outline or test specifications, whatever you like to call it. And then specifically mentioning equity public offerings, or in other words, IPOs, as well as secondary offerings, and a third topic under this category, SPACs, a special purpose acquisition company. Dean, please enlighten us.
These have been around for a long time, and they are also referred to as blank check companies. And a lot of people, a lot of private companies use these as a reverse merger into this newly formed public shell. Now, my guess is the reason state administrators are concerned about SPACs is because it's a lot less disclosures for a private company to do a reverse merger into a public shell using the SPAC.
What do they have to disclose? They don't have any.
That's exactly right. Whereas if the private company went through the traditional process of an S1 and a cooling off period and quiet time, the other thing I think they're concerned with as well is the promoter fees are substantial. So there will be a lot of dilution, and a lot of times the public may not be as aware of this idea of the float and what the promoters are receiving, and when those shares will hit the public marketplace. And is it always with state administrators in the SEC? I think they're always a little behind the thing. The marketplace has really addressed this already. There are a lot less SPACs because of the bad reputation they've earned over the last 24 months or so.
And you would then imagine that regulators would like to include some of these shadowy things in the test content. Again, a SPAC, correct me if I'm wrong, basically a shell company. They have no operations. So you're basically buying stock from a company that doesn't do anything.
The idea is we're going to take the proceeds and we're going to go make the acquisition. The other thing, Brian, that is important is there has to be an escrow account. I don't think they'll get into the weeds this much, but we have to escrow the proceeds. And if we don't find an acquisition, we have to return the funds if we don't do it within 2 years. Right. That too is a red flag, because that means I probably don't want to give the money back, which means I'll be willing to pay a higher price for the target company than perhaps I otherwise would. Right. Because the shell doesn't really mean anything economically to me, except that I got like 30% of the shell or something.
Risk, suitability, those are the first things I start.
Same things it always is, indeed.
Yeah. I'm also trying to speculate on what else they could possibly ask under the investment vehicle characteristic. Again, IPOs are not for everyone to begin with. I mean, the normal S1 filing IPO, let alone a shell company say, we're going to take your money and buy something. We'll let you know within the next 2 years what we buy. My goodness. So that was one of the biggest changes I've seen under the investment vehicle section. The next area, again, same in the investment vehicle. We know REITs is an alternative investment, real estate investment trusts. And oftentimes the tests focus on the liquid, traded, exchange listed REITs that we all know and love. But over the last, 10, 15 years, we've seen a lot of popularity in non-liquid, which means non-traded, non-registered REITs, which again, you have some liquidity issues. Care to comment, please?
Yeah, Sam, it's the same with the SPAC again in terms of transparency or as you say, shadowy. I think that's the word. It's a word, right? There's a lot more transparency in a publicly traded REIT because they're filing 10Qs, then the 10K, and it's trading. You can see the stock go down and say, what the heck is going on over there? Whereas if it's a non-traded REIT, a lot of them are sold as private placements, and it's a diversified portfolio, real estate. But again, the state administrators and the SEC are concerned about this idea of people not understanding the lack of liquidity. You can't get in and out of this vehicle. The other thing is the promoter's fees, as is in SPACs, are substantially higher in a non-traded REIT. Your broker, listen, I come to the broker side, so please don't in the comments start throwing rocks at me for making the comment I'm about to make. I sell you $100,000 of Boston Properties, BXP, on the New York Stock Exchange. That commission may be as little as free if I do that at Schwab or Fidelity. If I take that same $100,000 and put you in a non-traded REIT, that commission's like $8,000. And the regulators think that could compromise your Regulation BI to act in the client's best interest. Now, on the test, as we know, Brian, you got to believe in human depravity, original sin. And that what we would think that a salesperson would do is try and say the lack of liquidity is a good thing. It's a good thing, Brian, that you don't know what's going on because that'll give you a higher return. It's like your house doesn't trade every day. Not so much. That's not really, we're supposed to give people the negative, the downside more than the upside. So this lack of liquidity sometimes is sold as a positive thing. And that's a red flag, this lack of liquidity. And the other red flag is the fee structure is much higher than a traditional publicly traded REIT.
That's it. That's exactly right. Yeah, I agree 100%. The only thing they could possibly ask, I believe, would be the illiquidity. It's just add another one to the list of more sophisticated alternative investments that are illiquid, like a limited partnership, like a hedge fund, right? And now we have non-traded REITs.
Yeah, again, and you nailed it. What they regulators call it is, Brian, heightened suitability for these investment vehicles. I consider them, Brian, we have what I call plain vanilla investment vehicles, tried and true. We know how they work, and then we roll out some new fangled investment vehicle, not tried and true. It hasn't been around enough for us to decide if it's really something that does what it claims to do. Right. Like an ETN, for example, versus an ETF or an inverse floater fund or whatever the case may be.
Oh, my goodness. Right. One other change I've mentioned, and I don't even know if it's that much of a change, to be honest with you. Again, it might have just been this squished content, to use your terminology, that was unsquished. But I do believe there may be a question or two about more analysis of mutual funds, such as comparing funds, comparing styles. That's a big thing. I remember, who was it that always had the style boxes, the value versus the blend versus the
I
growth.
think that one has like a suitability thing where they do that.
Yeah. So I think there may be a newer question pertaining to analysis of funds. Manager tenure, of course, would be one.
Always there. That's been there.
That has been there. That is correct. Yeah. And again, I wonder if that might have been one of those, experimental questions for June 12th, the manager tenure question. I don't know. Anyway,
I think sometimes they tweak. I think they sometimes tweak, Brian, questions and subject areas, and they're not, they're adjacent to what they're already asking, so to speak.
Right. Okay, another change, and I spotted this one off, and I thought, aha, about time. You know, figured it was going to come into the outline, the test specifications at some point in time. Digital assets. What do you think, Dean?
Yeah, I think again, it's always, I always just joke behind every act, there's a story. And I've been at conferences where I've asked a regular, what's the story behind that one? Because there's got to be a story. I mean,
That's right.
in fact, usually it has a name like a Ponzi scheme. There was really a guy named Bonzi, right? And I think here the big thing has been they had cryptocurrencies in there. And when cryptocurrencies, and I was a fan as long as it was a cryptocurrency and it was a medium of exchange. Like Bitcoin has been deemed to be a commodity, not a security. But the SEC and state administrators are going after all kinds of crypto exchanges and digital investment opportunities that are being sold as investments. I think here, and again, it's being currently litigated about whether a digital asset is a security or not. I think here what they're concerned with is, are you aware enough as an investment advisor representative to know that you may be selling an unregistered security?
That's right.
Because if that digital asset is being offered as an investment opportunity under this Howey decision, right? That says what is a security, and I think they just want you to have a heads up, and that's why I think they changed it from cryptocurrency to digital assets to give them a broader category of potential regulatory framework questions.
Any question that they may ask about this has got to be wide and general. It really does. I don't see anything real specific about getting into cryptocurrencies and how they trade.
No, I just think unregistered securities.
Right.
Yeah. Right.
You and I talked about this earlier. I still have trouble trying to determine, whether these things are in fact investments. They certainly sound like it. Yeah. I've actually had people come to me and say, Brian, I need a Series 65. I'm about to sell cryptocurrencies.
Yeah.
I'm about to sell Bitcoins. I said, well, it's not even a security.
Yeah. The Bitcoins have been deemed not to be, but some of them are still iffy. But I would also say, Brian, that just in these test specification changes, last time they changed this document, they added cryptocurrencies. Right. But I powered up. I got ready. I'm going to teach this. I bought 5 books. I read all those books. I was getting ready to write some practice questions. But I have yet, Brian, I don't know if you and Debrief had anybody tell me they saw from the previous introduction of cryptocurrencies of being testable content to anybody who actually saw a question about one.
Nope.
There you go. So maybe this will be, the same thing,
Yeah. Now, help me to help my students a little bit, because again, it's still a little cloudy for me.
Yeah.
I almost think of these as tangible assets as opposed to investments. Would that be a good analogy, you think?
Yes, and it is.
It's sold that way, right?
As long as you sell it correctly. So, for example, being a Marine, I like to buy from the Bradford Exchange, Brian. I like to buy some of their collectibles. Let's be very clear, collectibles. I got a Stein with an Eagle Globe and Anchor. I got a platter thing. And I can't tell you, Brian, the one-page disclosure that comes in the box saying this is not an investment opportunity. This is a collectible.
Exactly.
And my aunt, she thinks that her diversified portfolio of Bradford Exchange plates, the Elvis plate, is her retirement. And she told me it's appreciated 500%. I go, only on the ask side. There's no secondary market. Now, what the main administrator and SEC is concerned about is that these people selling these tangible assets don't misrepresent them as investment opportunities. In fact, I've seen infomercials with some of these collectibles where they say this offer is not made in a particular state. And I'm sure it's a state administrator who saw the infomercial says, that sounds like you're selling an investment. Doesn't sound like you're selling a collectible.
Exactly. So again, that would probably, this particular area will probably be yet to be determined. Again, anything that comes up can't be that specific. It's got.
And then as we always say, you see something, say something. Brian and I are always asking, did you see something? If so, let us know what you saw. We're not allowed to ask you like, what was question 35? But we can say, hey, what were you not prepared for? And you say, hey, Dean, you said there was no digital asset question. I got one. Oh, okay. Well, there we go. So now
you treat it like art collection and baseball cards.
Yeah.
They're not securities. The next area I've seen, again, I've heard this show up on the test. Maybe it was at one time, one of these beta questions. It's about investor attitudes and values. Now, that's how it was written in the prior or current test specifications. In the new one, it is broken out now to environmental social funds, tobacco, gambling, alcohol, religious beliefs, whatever. I believe there probably will be a question. Type of fund. Dean?
Yeah, I think that again, these are current things. The SEC has been concerned as state administrators with two things: mislabeling. In other words, Brian and I have a fund that is really just a plain vanilla mutual fund, and then we know that this is on people's mind, and I relabel it. Like say, hey, let's call it an ESG fund. Let's tell Brian that we're doing a screen. And Truth in Labeling, they've dinged mutual funds that are just changing the title of a mutual fund to be ESG when it really isn't part of their screening, and then as an excuse to charge more for it. So it's even worse, right? When we change the name without doing any additional work and just based on the labeling, charge you another quarter or 1% for it. But then Brian's also correct that they've always had questions about being in harmony with our clients' values. In other words, is it important for them that we screen and not put their investments in things that they don't support, like tobacco or gambling? And I used to sell, Brian, it reminds me when I was a broker, I sold a lot of mortgage bonds for casinos here in Las Vegas, and I would send a postcard, how would you like to hold the mortgage on this building? Every once in a while I get somebody, I'm not going to support a casino. I go, oh, gee, okay, my bad. Find something else for you, right? So.
I was thinking about creating a inverse ESG.
There's a fund. It's called the Vice Fund. A guy has a fund. Right? It's called the Vice Fund, and he buys tobacco and alcohol, and he buys nuclear weapon manufacturer. I'm joking.
Oh my goodness! Oh my goodness! Wow. Okay, another area I have seen again, and it's in the retirement plan section. So we're now out of the investment vehicles into the client investment recommendations and strategies. I've always had trouble remembering that category. Anyway, in a retirement plan question, which there really isn't all that many to begin with. There never is. Everybody thinks that maybe it's the textbooks that think that there's going to be a ton of retirement plan questions, or they hope, because that's what they do in their office, right? But there's what, 3 or 4 maybe? The twosies, the threesies. So the new content theme is a solo 401k.
So solo 401k, I think, Brian, what it basically is what we used to refer to as a KEO. Senator Keogh came up with a retirement plan for self-employed individuals. And this is a solo 401k as a retirement plan that can maximize savings for self-employed or partners in businesses that allows them to provide for their retirement. The Keogh question used to be, and I think the solo 401k question would be no different. Of those retirement plan questions, some are, well, who gets it, right? Like IRA, you have to have earned income, for example, or 403b, you got to be a employee of a nonprofit or educational institution, or in this case, solo 401k, you have to be self-employed to qualify for this, or a partner in a business. So I would think that would be what they'd be asking on this one.
I think you're absolutely right. Again, let's recall, for some of us a little younger, there was a retirement plan out there for essentially professionals self-employed called a KEOGH, K-E-O-G-H. I believe it was a Cajun senator from Louisiana, the French is where the pronunciation comes from. And Dean, I haven't heard a Keogh question in 10 years.
I haven't either.
I told people it's the dinosaur of retirement plans. It was pretty big in the 70s, 80s. And then the 401k came in and just like, why do we need these Keogh things?
That's exactly right. So I think that would be if they reintroduce this, because remember, some things that are changes never show.
Right.
But that being said, I think it would be the same question that used to be there in those 70s and 80s. Wow.
I preface by telling everybody we're old war horses.
Yeah. Anyways, I think it'd be the same question, just who qualifies for it. And I totally agree with you. People overdose on retirement plans. As much as I try and tell them fly high, 59.5, 73, 10%. Don't be spending.
It's hard. It's hard to fly high on some of this stuff.
Yeah.
It really is. Okay, another area, and it's fairly in the same category. It's under ERISA issues. The old test specifications had it listed under 404C, and that's all they listed. Now they've become a little bit more specific with a thing called a qualified default investment alternative, QDIA, which, correct me if I'm wrong, but Dean, I want to hear your input on this.
Mm-hmm.
Generally, if an employee hasn't started contributing to a 401k, even though it's to your best interest, the company will do it for you.
Well, it's based on behavioral finance and what's called the nudge factor, that it takes people a nudge perhaps. And so basically what it is we're not going to open the 401k for you, but once you have opened it, there'll be a default asset allocation made for you,
Right.
Whether it's a mutual fund. In other words, because they found that too many people would never make a decision about, they're sitting there in cash rather than putting it in a index fund. Most of the defaults that I've seen have been a index fund, where that would be the default if you don't do that, the nudge. Or the nudge could be the default, could be an asset allocation model, but it is used to make sure that somebody does indeed take the next step on a non-voluntary basis. I guess that's what's strong.
That's right. That's right. Right. And it's still all around 404C.
Yeah, that's right.
Three investment choices: conservative, moderate,
That's
aggressive, that kind of thing.
Exactly.
So it really hasn't changed that much.
Mhm.
They just threw in a fancy schmancy term.
Exactly.
One more to remember, right?
Right.
I need to bring this up. Joint with rights of survivorship. And I only bring this up because they may bring this up and people are going to say, what the heck is this? I've never seen it. A community property with rights of survivorship. Dean, what do you think?
The homework I've done on this, Brian, is it's primarily used on a state basis for real estate, and it combines some of the tax advantages of community property with what we already know about joint tenants with rights of survivorship. And so, again, it'll be interesting to see if this makes it into a beta experimental question or not. It might be like we talked about with cryptocurrency, nobody ever sees it. But from the homework I've done, that I think would be the question, which of the following combines, joint tenancy or something like that. Again, if it is
it still avoids probate, is that correct?
That's exactly right.
So that's the same as joint with rights of survivorship.
Yeah.
One idea I had when looking at this, that it can allow for certain carve-outs based on a will of certain assets.
Yeah, I would think so. We'll have to wait to see it.
Okay.
Right now, it's pretty. I wasn't happy with any of the homework I did on my Google machine. So, this is one of those things to be revealed in the context of beta question. And then remember, beta questions tested for validity. If majority of people don't get it right, it just goes bye-bye because they're not allowed to leave questions in the Q bank that the majority of candidates do not answer correctly. So
again, everybody has to work at the same.
So it'll be interesting to see, Brian, on that one. I'm with you. That one's not as straightforward as some of the others.
Here's something that I found that was interesting that you and I know fairly well from some of the other exams, primarily some of the supervisory exams. And that's the concepts of introducing broker-dealers, clearing firms, those sorts of things. What do you think? Introducing broker-dealers.
I think, Brian, I've been thinking about this, and I think if we do encounter this, it would be what they're always concerned with is custody. I can't steal what I don't touch. And, if I'm a clearing firm, Pershing, National Financial, and those are where the securities are, as an investment advisor representative, I don't present much risk to you because I say, Brian, we're using Pershing or National Financial, you send the securities there. Now, if I'm an introducing firm, there might be an intermediate step. So you might send the securities to me, your money's in security, for prompt forwarding to my clearing firm. And so by introducing this pit stop on the way to the clearing firm, I think there is a chance for what's called fraudulent conversion, which is, your securities don't make it to the clearing firm. I've absconded with them. So I think this would be if we see it again, I think it would be in the context of a custody question, and that, there is a risk that the introducing broker does not forward the securities to the clearing firm. I think that would be where I think that your point, that's the only way I think it fits in the context of a NASA exam, because it's certainly like not how we teach it in 24, for example. They're,
That's right.
Clearing firms and introducing firms and market making firms,
Right.
that would be my
and
thought.
Net capital requirements and
That would be my thought on this, is that this introducing broker, is not a clearing firm, and therefore the custody is being done at the clearing firm, not the introducing firm, and we're worried about that introducing firm.
So here's what I'm thinking. It's in the trading securities section of client investment recommendations and strategies. Okay. Introducing broker dealers, clearing firms. These are all very, very common mechanics that occur around IAs, investment advisors. I deal with a lot of private, independent IAs. And I used to tell people, I used to work for a mutual fund company that dealt with IAs, and I used to teach the sales team, I'd say, look, right, IAs typically are folks that have opened up their own shop. They probably came from a large broker dealer, right? And the one thing that they don't have when they open up their own shop and they hang their own shingle, they don't have a big trading department. They don't have a big compliance department. So you either build one out at a cost of a lot of capital, or you hire a third party. And that's where TD Ameritrade, Charles Schwab, Fidelity, Pershing operate as our trading platform.
And they love that business. They love it.
Absolutely.
So your point, we're using those firms for execution and custody for our investment advisory clients. And then again, if it's a Schwab's not a clearing, it's a clearing firm just for Schwab, but your point, investment advisors. So that's the distinction. An introducing broker dealer is not providing execution and custody. The clearing firm is. Here, we're introducing another intermediary to that transaction. And I think that's where the risk is.
And that's not always that transparent, especially to the customer.
The customers don't get it. Brian, I was using a clearing firm, and as much as I explained don't give me the money, send it to the clearing firm. They would send it to me, addressed my firm's name. I have a checking account. If I choose to abscond, it's $1 million. I could cash that and leave. And I'd say, Brian, I've explained this to you how many times. Please don't make checks payable to my investment advisory firm. Please don't make them payable to my introducing firm. Make them payable to the clearing firm.
Right. Well, again, having this in the trading securities content area rather than the rules and regs, where we always deal with custody and disclosure, location of securities, all that stuff. So it has to be surrounding somehow the transactions.
Yeah.
Right? That the transactions are going through a third party. Could it add additional costs to the customer? Potentially. If you look at the order flow through these different entities and how much that could potentially increase the cost. What do you think?
Well, a couple issues here on payment for order flow. If we're using the customer, we always disclose capacity. So if I'm an investment advisory firm and I'm using a clearing firm, on the com firm, it'll tell me whether the broker dealer acting in its broker agency capacity or its dealer principal capacity. That's always something that has been tested. And, I'm entitled to know the contraparty to the trade. And the contraparty is, if it's in you're confused if it says we acted as a dealer, but, the contraparty would be, Citadel, for example, pays hundreds of millions of dollars to Schwab for payment of order flow. And, I call and ask who's the other side. It's Citadel. I go, man, that's crazy. And Schwab says, no, it's not a coincidence. We receive hundreds of millions of dollars in payment for order flow. But as a result of that, we still get you best execution. And when a market maker is receiving payment for order flow from a broker dealer, they have to honor at all times, very testable, the inside market, the highest bid and the lowest ask. And that means our investment advisory client is not receiving any damages or any worse of an execution than they would have received if my broker dealer was not receiving payment of order flow. So that is, I think, the issue, this idea that if there is payment for order flow from a market maker to a broker dealer, that market maker has to always honor the highest bid and lowest ask to the client of the broker, who, remember, is also a client of the investment advisory firm.
Do you teach the inside quote in your Series 65 content?
Oh, I don't. I can never decide.
I don't.
Well, Brian, we always talk about this. I can never decide whether it's options or trading.
Me too.
We agree that the 65, ladies and gentlemen, test takers is a real challenging exam, and it's hard even for us to make editorial decisions. I just tutored a guy today, Brian, and we spent more time than I'd like on options and trading. But people do struggle with, as we know, the investment side of that. So yeah, I do cover briefly the idea that, customers sell at the bid and buy at the ask. And, briefly, I also, I think it's testable, Brian, in the context of a cross agency trade where there's a bid and an ask. So maybe I go a little too much on it, but it's always a challenge. If you go to my playlist, Brian has the best paid supplement to your paid study materials. I have the best free supplement. And Brian, that 65 playlist, some days it has 50 videos, sometimes it has 100, sometimes it has 20, because I can never decide. Do I put that video in?
Yeah, I think one of my favorite sayings that I use specifically in Series 24, but I also steal it for Series 6 and 7 and 65. You got to know your bid from your ask. In fact, I do teach the basic bid and ask structure, but not the inside quote where you're getting.
I actually stole that from you. You told me that, I forget how many months ago, and I made that a title of a lecture, and it's doing well.
Good instructors borrow, great instructors steal. Right?
There you go.
Because if it works, and you take it. So no problem there. Okay. Another area, and now we're getting to the laws and regs, and I think I've got one or two maybe, and they're not that big of changes. Maintenance of your registration. I love how that's stated. In other words, is there changes in your U4 information, and what are you required to do? Dean, please.
Yeah. We have U4s, and if you can answer everything no, that's called a clean U4. And if you have a yes answer, it's called a dirty U4. And there are some yes answers that are dirtier than others. And the main question I think we would encounter here is amendments to a registration. So to maintain your registration, you have to make amendments. I don't know if it's going to show up in a timeline, but anything that is a no answer on a registration statement of an individual is 30 days.
30 days.
Right. So 30 days to maintain. In other words, you're not in compliance with your registration status if you have not amended your registration for answers that are now yes that used to be no. That's what I think they're getting at in that area of the test. What do you think? Is that what you think it's about?
I'm almost starting to think for sure that the answer choice is going to be 15, 25, 30, 45 days. What else could you ask?
I don't even know, Brian. I would be interested in your thoughts on this too. I know a lot of people sometimes get this question about, and I would consider this disclosure as well as maintenance, but the idea of the 120 days on the Form ADV, if there's been a material change.
Right.
Right. So it could be, maybe they're just formalizing that a little more as well.
That's right. As I turn my phone off.
These podcasts are authentic.
Yes, they are. Well, I've only got really one more change, and I kind of like to hear your thoughts about this, but it is about issuer, agents, and finders. And I'm kind of stuck as to, because it's in the laws and regs section. So I think you and I know already what they're going to ask. Would these people have to be registered? But since they added the IPO, material back in investment vehicle, I might just kind of smush these together so we can illustrate that entire process. Anyway, issuer, agent, and finder. What the heck is that, Dean?
I think this, it used to be that, there were circumstances where people say, really, I have to set up a broker dealer with all that cost just to raise some money for, a brewery or, something like that, a private placement. And the answer used to be yes. And it used to drive me nuts as somebody who spent those resources that other people would not. And I think they finally just, have decided that, do you really need to be a broker dealer to assist issuers in raising money from accredited investors in private markets for, example, a brasserie from some chef or something, or a winery.
Right.
And so I think this is what this is about. It's about allowing somebody to assist in the fundraising, either on an introductory basis, leave it to the SEC. Tier 1, I can only introduce you. Say, Brian, hey, I got this, opportunity for you. Here's who you need to contact. I don't even think this is going to be testable. Tier 2, I can say, hey, I'll help you. I'll go with you and I'll help you perform due diligence. And I think that's what the question is going to be. It's going to be just like any other exemption that you get tested on. And I think if we see this, again, we don't know what we're going to see on the test, but I do think the question would be, again, who is this exemption available to? And we'd have to come up with it's only available in private markets to accredited investors.
There you go. Perfect. Yeah. That's even if it shows up.
Yeah, we don't know. Like we say, it's speculation. This is a speculative podcast in terms of those specifications, June 12th. And I did find out from NASA, it is midnight East Coast time that they're changing. I'm teasing. As we said, there'll be a transition period, and we will find out how much of this new stuff shows up as, verbatim, something they added to test specifications, and it's a test question, and things that they put in there that we never hear about ever again. So we'll find out.
It's difficult, a challenge enough for students and for you and I to make sure that we diversify our students enough so they can pass the exam, right? Without having to memorize 600 pages of text. I mean, that's just ridiculous. No one can do it, and you shouldn't have to. So it's enough to kind of wrap our heads around all the content in the Series 7, or what like you like to call a baby 7.
Yeah.
So with these, 5 changes? Maybe?
I don't think it's material. I told a guy today, if anybody from June, I'll say June to the rest of the year, if they tell me they missed their mark on 65 because of the changes to the test specifications, I'm going to say, really? You were below 70? Remember, the whole point of this has been to make it easier for people to pass so that people can get the human capital they are relying upon. So that is the big picture, ladies and gentlemen, test takers. The big picture is they're not making it harder. Lowering the score is admission. It's going to be easier. More people are going to pass as a result of these changes than previously did. That's the point. So that's the big picture. And I know people don't want to hear that because people they like to be fearful. But I told a guy today, I said, we're doing a podcast today about changes, and most of it is cosmetic. It's not material. We talked about unsquishing things and making it prettier in terms of the document. But
as I mentioned, the test is a challenge enough getting our heads around what we need to know to get what will eventually be a 70%. Without having to put these high-flying, sophisticated concepts of SPACs and issuer finders and these sorts of things that just make the content more.
And we're obviously not fans of those books that continue to get bigger, Brian. But this just gives those test prep vendors an excuse to add another 200 pages unnecessarily, right? Because
well, the good news, that always keeps you and I in business. Right? As I've always mentioned, Dean, turning mashed potatoes into premium vodka.
There you go. Go.
That's my job. I love it. So, test takers, I hope you enjoyed that. I hope your fears are somewhat allayed, that the purpose is to lower the test score and increase the passing rate of the Series 65. It's not really about adding sophisticated content to make it more difficult. It's just not going to happen. So, Dean, any last thoughts?
As we always say, inch by inch, your 65 is a cent, yard by yard, your 65 is hard. Please let us know your comments on the podcast. This concludes our 65 podcast collaboration. We're probably going to be doing some others. Maybe we'll do some general content as well in different exams. But I'm hoping, ladies and gentlemen, Brian and I come into your life for a reason and a season. The reason is to pass your exams, and the season is how long that takes you. And if you started with an SIE, a 6, 63, and now 65 is the last leg of your testing journeys, congratulations, kudos to you. If the 65 is your one and only exam, Oh, as I mentioned, Brian, I said that's a real challenge. That's more of a challenge for those folks. We are wishing you the best. We're sending you good test vibes. Brian?
And some last words, as I've always mentioned to people. And these terms, these concepts are just perfect, right up my alley. Keep it simple. Stay with what you know. You take the test. Don't let these people take the test for you.
Right on.
Keep it simple. Get that P out there. Thank you, folks, for joining us for the Series 65, the Geek and the Guru. We hope to see you real soon. Take care.
All right. Bon John.